Hey, Garrett. All right, I'm going to try and keep this really short. I'm not going to go back and show you. I might go back and show you a couple examples, but I just wanted to walk you through what I've been noticing as kind of a trend. Um, and so rather than just telling you, I thought I would just show you what I'm actually describing, um, so it's easier to see. And so the 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 general gist of it is that if during the first 15-minute candle of the New York Open and or the second candle, but really the first few minutes of the second candle, if either buy side or sell side, meaning, and when I say buy side or sell side, I mean a prior 15-minute swing high or 15-minute swing low regular trading hours, if one of those in the first candle or the first few minutes of the second candle has been taken, then you have a much higher probability of going ahead and entering prior to 10 o'clock and having lower resistance conditions. If it doesn't happen, then it's better to wait till after 10 o'clock to frame your trade. And you still may have high resistance conditions along with that. The underlying premise is that in that first opening range, if no previous if no I mean so if no 15-minute buy side or sell side has been violated, then then it the market needs time to create a new 15-minute high or 15-minute low to violate after 10 o'clock. So if it happens in that first hour or that first 15 minutes, or the first few minutes of the second 15-minute candle, so the 9:45 candle, then you're much more likely your trade is going to be much more probable that you don't have high resistance conditions. So what I mean by that is, like, if you look at right here, our 9:30 open is right there, and our gap is down here or wherever you see your draw. So if you look at this on a finer level, it opened right here. This market opened right here and blew up and took out buy side right there of a previous 15-minute higher low regular trading hours. So if you have a bearish draw, because that happened, an entry in this candle prior to 10 o'clock, assuming that you're, whatever entry technique you use and your bias is correct, this can be trusted and it's going to be high probability because there was already some regular higher time frame, regular trading hour, sell side liquidity taken. That's the premise of how I'm looking at it. Let's just go look at a couple more here real quick so you can just see how I'm framing it, and then you can back test it yourself. And again, I'm not telling you when to or when not to enter a trade. I'm simply telling you that if there is not any buy side, any 15-minute buy side or sell side liquidity taken prior to 10 o'clock, and so generally it's going to have to happen in the first 15-minute candle or the first few minutes of the second candle, because it can't be, you're not going to get 15-minute buy side or sell side liquidity in two 15-minute candles prior to 10 o'clock, because you need 3 candles to get that. So it has to be a previous swing high or swing low. So here, our 9:30 opened, trades down and takes this 15-minute sell side. So if you see any sort of trade on the 15-minute chart or on the 1-minute chart, in here, if you see a trade prior to 10 and you're not, this is a little bit of high resistance here, but it's more or less it's going higher. But because this 15-minute sell side has been taken within the first candle, wherever you see a trade in here, it's going to, and your draw is whichever way it is. You understand draw. You understand where you'd be going to. I'm more or less talking about what you can trust if if something like this has happened, either buy side or sell side, 15-minute regular trading hour. Doesn't matter where your target is, but these trades can be trusted prior to 10 o'clock and are much more high probability. There's our 9:30 open. There's our 9:30 opening price. So here's a swing high. And let's call that a swing low. Another swing high. Back to the 1-minute chart. So in some scenarios, like this one as an example, the first 15-minute candle closes right here. So that's a 15-minute open close, if you will. Let's call it open. So this 15-minute candle did not take out 15-minute buy side, or this first candle did not take out 15-minute buy side or 15-minute sell side. So it's not to say that you can't take a trade here to this buy side. It's simply to say that if it doesn't happen in this candle or the first few minutes of this candle, and your draw and your market structure understanding is solid, you're better off waiting till 10 o'clock because you're going to get some of this price action that is a little bit high resistance or could be a little bit confusing. It's not to say that you couldn't take this trade and go, my draw is here. We have not taken buy side or sell side 15-minute, but I'm at least going to take this trade to these relative equal highs on regular trading hours 15-minute. Or that doesn't mean that you can't do that. I'm just saying that if you want to have some sort of a measure of when you may or may not want to take a trade prior to 10 o'clock, and you want a measure of when you may or may not have high resistance liquidity conditions, this seems to be a way that you can anticipate or expect or whatever. And again, I'm not saying this is a bad scalp. I'm not saying anything, but if you're looking for, longer trades or whatever, I mean, this happens to be one that's good. But again, no liquidity has been taken here. So whether you see, I mean, some people some people would look at this and go, all I see is chop. The chop is real. The chop is real. But if you are understanding that your draw is here and that you need to, that some sort of 15-minute buy side or sell side has not been taken yet, one could frame a scalp to there, knowing that the middle of our opening range gap is here and we have not taken 15-minute buy side or sell side, so we're going to get some first before we come down here. So just know that that's, again, I'm not saying when to or what trades to take. It's more or less to use as a filtering device for when you may or may not want to take a trade, depending on your draw. So prior to 10 o'clock. So again, in this example, in this first 15-minute chart, first 15-minute candle, no higher time frame, regular trading hours, 15-minute buy side or sell side has been taken. So you get some of this, and then understanding that your draw is to here, and understanding that the market needs 15-minute buy side or sell side liquidity. It needs it. So if it's not getting it in the first candle, then it may search it in the second candle. And for sure, if it doesn't get it in the second candle prior to 10 o'clock, you can almost bet that you're going to get a bunch of choppy, high resistance price action until it creates its own 15-minute high and then takes it out, and then you can take your trade. So that's the premise of what I'm saying. Like I say, nothing earth-shattering, but it gives you a filter. We'll do one more. Just so you can see how I look at it. That's a swing low. Make it bigger. And we have that as a swing high. We'll just stick with those. And if that's 930, so our opening range gap is going to be what? This, I'm just going to use the 15-minute chart. This close to that open. So what I'm saying is that since the market opens here and trades down and takes out 15-minute sell side right here, if you see a trade prior to 10 o'clock that has a draw in the right direction and has everything that you need, you can be safe to take it. Is this a little bit of high resistance? Yeah, a little bit. It's consolidation, but the principle's the same. It took out sell side, and in this scenario, it's kind of an easier one. It's market opened. Here's opening range gap. So obviously our draw is going to be to the middle of that potentially, even though it's a small one. Let's say you have whatever. But when this market trades down, it takes out this 15-minute liquidity right here and then gives you a breaker. And whether it's this or this is your first presented fair value gap, you can trust it. If you see, what I'm saying is too, is that you can trust that. Now, granted, this is 10 o'clock, but if you have if in your model, you have a low, high, lower low, and 15-minute liquidity is taken, and then a change in the state of delivery, if a guy wanted to buy right there at 948, it's a high probability trade. And then on top of this, one could go, here's the 9:45. This change in the state of delivery right there is also the 15-minute open. So you could trade the open of the second 15 of the 9:45 candle. Opens, trades down, takes, it's the end of the breaker, takes this liquidity, trades back above its opening price. Bodies respect it. You can buy it. And then from a longer term perspective, this is a good example too, because now we get to our consequent encroachment. And then this right here is going to be our bullish breaker. It's going to, oh, we could use these right here. A lot of times I'll take this, put my, on the longest run of this, of this bullish breaker, or let me do it this way. Let me take these off. It's kind of confusing. So even if you just use this entire leg of this breaker, even though there's an order block in there, because we're not trying to say it's an order block, we're just saying this is one leg of the breaker. This is the highest up close before the down move. So you could use, if you simply used this right here, it's going to color outside the lines a little bit here, but most of the time I'll use that to kind of go off of a frame of where could I expect this to retrace back down to from a market structure perspective before it rallies. But that's it. Obviously, that's 1050 macro. So anyway, but point is market opened, sell side taken, breaker. If a guy sees a trade in here or waits for the first presented fair value gap to get to there or whatever, it can be trusted because liquidity, 15-minute liquidity was already taken. So it's when 15-minute liquidity is not swept from a previous swing high or swing low during that first 30 minutes, it generally is going to give you more, and you try to trade prior to 10 o'clock, it's potentially going to give you more difficult conditions. So anyway, hope that helps. We can talk about it more if you want. Shoot me a email or leave comments on this video or whatever. So, all right, or call me. Bye.